there has been a little more inventory coming on the market. For the luxury market, 10 contracts signed at $4 million and above. Off-market properties up almost 98%. I told you I would let you know when the buy signal was happening. And now I'm telling you, it's happening. Welcome to this week's look at the state of the New York City real estate market, where I take a look at the luxury market, the Manhattan market, and the Brooklyn market. I do it because I want you to be informed. It never hurts when you're a consumer to be informed. Welcome to this week's look at the state of the New York City real estate market. This is for the week of September 11th through the 17th. Going to get started with the luxury market. There were 10 contracts signed last week for properties that were priced at $4 million and above. One of those was in the trophy market category, so that means it was priced at $10 million and above. 10 contracts, that is significantly less than the week before when there were 18 contracts signed at properties that were priced at $4 million and above. 8 of those were condos, 2 were townhouses. There were no co-ops in that mix at all. 5 were uptown, 5 were downtown, so pretty split across the board. There were holidays. We're still dealing with the aftermath of Labor Day. School was getting started. Of course, the Jewish holidays were in this mix last week. So it's possible that all of this was playing a factor. We're going to have to see what happens as we move forward. The number one contract was a townhouse at 60 East 66th Street, asking $13.75 million. It was reduced from $18.5 million when it was listed back in August of 2017. The 6-story, 20-foot wide limestone house has over 9,700 square feet. It's been configured into 10 free market units with an elevator. Annual real estate taxes are over $133,000 a year. Seller purchased the house for a little under $6 million back in February of 2010. The number 2 contract was Unit 1104 at 515 West 18th Street. It was asking $8,750,000. It was lowered from $10,950,000 when the building started marketing back in the summer of 2020. Condo has a little over 2,500 square feet. It includes 3 bedrooms, 3.5 bathrooms, a 42-foot great room and master bedroom open onto a 1,158 square foot terrace with little views of the Hudson River. The building is known as the Lantern. It was designed by Heatherwick Studio, architects of the Vessel at Hudson Yards and Little Island. The amenities include a doorman, a health club that features a 75-foot swimming pool, infrared sauna, cold plunge hot tub, massage and treatment rooms, steam rooms, a playroom, library, game room, a yoga and meditation room overlooking the Highline Park. If we look at the stats for last week, the total weekly asking price sales volume, $63,595,000. Average asking price, $6,359,500. Median asking price, $5,475,000. Average discount from original ask to last asking price, 15%. Average days on the market, wow, a whopping 1,183. Okay, that's it for the luxury report. We're going to move on now and take a look at what happened in Manhattan. A lot of changes in this market. Be sure you stick around till the end of this report. I'll give you my thoughts and takeaways, probably especially helpful to those buyers and sellers who are currently active in the market. So last week in Manhattan, we saw that the supply 500 for the week, that is down a little bit, a little over 16%. Contracts signed rose a little, 152, that's up almost 24%. Off market also rose a little, 218 for the week, up just a little over 10%. If we take a look at the 1 month view of the supply, 1,443, that is up a little over 46%. We really need more inventory, and we're starting to see it. Contracts signed down almost 29%, 634 contracts signed, off market 730. That's up almost 7%. If we take a look at the market pulse, we see that it is starting to drop a bit as we see that the inventory is rising. The demand is, while it's not terrible, it is kind of tapering off a little bit, and that's kind of creating a little more of a balance in this market. If we look at the liquidity pace chart, this 30-day moving window of contracts signed, 671, we see that it is kind of just hanging around in this number where it has been. It's kind of staying steady. So it's kind of moving sideways. The supply, while it is increasing a bit, it does remain at this lower level when we compare it to previous years. The demand, we see that the pending sales are ticking a little higher. The liquidity is a little bit lower. The new listings are lower than in previous years, even though we saw just a slight increase over the last week. The number of contracts signed did tick up, seemed to be kind of in the typical seasonal range. This is an important chart for both buyers and sellers, but particularly for sellers. It is the Manhattan renovated versus unrenovated properties. Data definitely is suggesting that there is a rising penalty for those unrenovated units. Buyers are preferring units that have been freshly renovated or are brand new. And in Manhattan, we're looking at a spread of a median of 30%. Now, don't get too attached to that number. This is a median number, but what it is definitely showing is that there is a spread and that buyers are definitely showing a strong preference. So if you are a seller, you have a property that, let's say, needs some work or perhaps just has a slightly older renovation, and you're wondering why you're not getting traction on that, and you're having a little harder time attracting buyers and getting those offers, this is likely why. That's it for the Manhattan report. We're going to shift over, take a look at what's going on in Brooklyn. If you have any questions, please post those below. Again, I'm going to sum this all up at the end of this report, so be sure you stick around for that. So if we take a look at the 1 week supply in Brooklyn, we see the supply is down 212 properties for the week, down a little over 12%. Contracts signed up a little over, actually almost 27%. 119 contracts were signed. Off-market properties, wow, that also rose for the week. 93 off-market properties, up almost 98%. The supply for the month in Brooklyn, 706, down almost 8%. Contracts signed, down over 30%. 447, and the off-market properties for the month, 299, up 6%. If we take a look at the market pulse in Brooklyn, we see that it is rising a bit, and again, it has to do with the balance in the market between supply and demand. If we look at the liquidity pace, this chart, this 30-day moving window of contract activity, 447, we see this also is kind of just moving sideways. Looking at the supply, the Brooklyn supply did tick up again, just a slight bit more of inventory, much needed in Brooklyn. The demand is ticking down a bit. Closings continue at a quicker pace than we are seeing new contracts. The new listings in Brooklyn arrive at nearly the same pace as the week before. And after last week's low reading, the contracts tick back up, hopefully with more to come as September continues. And if we look at the Brooklyn renovated versus unrenovated properties, the data suggests, again, a rising penalty in that spread between renovated versus unrenovated properties. However, if we look at that median spread, we see a slight, let's call it a slight less penalty 24%. If we look at that median number, again, I would caution you against getting too attached to these actual numbers and just understand that there is a penalty. So again, if you are a seller and you're struggling in this market and you have a property that may need some work, this likely has something to do with that. This is a very challenging market, both in Brooklyn and in Manhattan. And we are definitely seeing a market that has been for a time now very, very challenging for sellers. Some property types more than others, and we're now seeing the data to back that up. Now we're going to get to the thoughts and the takeaways for last week. For the luxury market, 10 contracts signed at $4 million and above. Only one of those was in the trophy property category for a property that was priced at $10 million and above. 8 of those were condos, 2 of those were townhouses, and there were no co-ops in that mix at all. 5 of those were uptown, 5 were downtown, likely to do with holidays, start of school. Let's see what happens this coming week. If we look at the Brooklyn and Manhattan markets, they're kind of, let's call them relatively equal. There are some differences. With regard to the supply, we see a slight rise in both Manhattan and Brooklyn. In terms of demand, we see both are sluggish. Slightly better in Manhattan than in Brooklyn, but it's early days of September. Buyers are just coming into the market, either re-entering or newly in the market, and they're just starting to take a look at the inventory. So it'll be perhaps a couple of weeks before they start making offers and going into contract. If we look at those renovated versus unrenovated property charts, we see that there are deep penalties for those unrenovated properties. Unfortunately, if we look at Brooklyn, the median on that is 24%. If we look at Manhattan, it's slightly more, 30%. Okay, sellers, this fall market is a short one. Be sure that you position yourself for success. Be best in class all the way around. Be the best looking thing out there and be the best priced property in your class. So be sure you set a realistic asking price. If after a couple of weeks you're not getting the traction that you want, you're not getting offers, you're not getting showings, make an adjustment and be assertive and aggressive in that adjustment, 5%, 10%. Don't wait too long to make that adjustment. The reason being, again, the fall market is a short market. So you have a short runway. Most contracts get signed, as I've been saying, in October, a little bit into November. So you want to be sure that you make that adjustment, make sure that you do it in a timely fashion so that you don't lose out on the buyer activity. Buyers, you are definitely in the buy zone. This is your maximum leverage, period. Don't miss it. If you've had your eye on things, get in there, start making offers. If you have your eye on something that is new to the market, you probably won't have a ton of leverage. You may have company, so you may need to kind of get close to or even at the asking price. Sometimes you need to even go over the asking price. It'll really depend on the circumstance and how well priced that property is. If it's a property that has been sitting on the market for, let's say, quite a long time, 120 days or longer, you're likely to get more play there. In any event, make those offers. Don't wait around. This is your moment. It's not going to get better than this. You do have some more choices now. There has been a little more inventory coming on the market. So this is good news. But you also have all those properties that have been sitting for a while. So now is the time. I told you I would let you know when the buy signal was happening. And now I'm telling you, it's happening. So go for it. Okay, that is it for this week's look at the state of the New York City real estate market. Be sure that you reach out to me with any questions. You can post them below. You can reach out to me at Sotheby's. As I've said, this is what I do. I help buyers, I help sellers. They have questions. I advise them. I work with buyers and sellers all day long, and I am happy to do it. So, as always, I want to thank the Olshan Luxury Report and Urban Digs, the work they do helps me help you to make great decisions. I'll be back next week with the very latest news on what's happening in the New York City real estate market. In the meantime, take care.